Okay, it's Friday the 17th. It's about midnight in the UK. So, well, it's 6:15 in Thailand, so it's just after midnight in the UK. Friday morning, I don't normally do videos on Friday morning. Friday to me is kind of a day when you don't really want to get too involved, obviously, especially if you've made some money during the week. Pointless blowing it all on a Friday and stressing yourself out before the weekend. And you don't really want to be running positions over the weekend, of course. However, I'm going to do this one. It's going to be quite lengthy. Probably be 2 or 3 videos because I need to try and explain what's going on, in my head at least. This is the dollar index. So we've had a great run with the dollar index. With the break above, with the break through 9600, we've had a run up to nearly 9700 this week, which was as expected. I did warn you yesterday that the dollar probably had topped and might reverse, and it did do that. If that was a big red candle, hang on, I need to open this up so you can see it properly. Sorry, 1 second. Okay, this is the daily chart. Now, if this was a big red-bodied candle, I would be quite confident in saying, right, we've got a topping pattern here. I think they call that a morning. Oh, I'm terrible with these names, as well you know if you've been with me for years. Anyway, whatever. When you get a big blue-bodied candle, and then you get this shooting star and a big red-bodied candle, that is a very negative pattern. So we don't quite have that, but I'm still concerned about the dollar at least seeing some profit taking. So, as I did warn you this time yesterday morning, it's time to exit dollar longs, and if you haven't done, well, you've got a second chance because we've bounced back, as you can see as I speak to you. Now, stochastic's looking a little bit toppy, starting to turn lower, so that kind of backs up my idea that we could be turning down. As you can see, we only managed one close above this little trend line here, which was on, let me see, 3 days ago, so that would have been Tuesday. And we seem to be holding below this trend line, so that's another little negative. Just in the short term, this isn't like a big sell signal where the dollar's about to collapse. The weekly chart still looks very positive. So from that, I would say we do want to be buying into dips, but we might get a dip. The short-term chart, the 1 hour chart, is quite interesting in that this is a potential head and shoulders. Now, head and shoulders patterns on the 1 hour chart shouldn't be taken too seriously, and I did take the pound sterling, the cable inverse head and shoulders quite seriously during the week, and I got that wrong. It didn't really work well. It gave us 50 pips. Well done if you managed to nick that 50 pips, but I was looking for more than that. So I'm not going to take this too seriously, but 100-hour moving average is at 96.53. We start trading back below there, it's going to be a little bit negative. If we do break below 96.30, sort of 96.40, 96.30, that would complete the head and shoulders pattern. As I say, I'm not taking it too seriously. But we've got a little bit of a fib there at 96.20. So again, 96.40, 30, 20, get below there. Who knows? We could head down to 95.80, 95.70. Now that is good support. You've got some overlapping areas of confluence with the short-term fibs. You've also got the 500-day moving average just below 95.55. And if I show you the weekly chart, you'll remember this anyway. You've got the 200-week and 100-week moving averages just below around the 95.50, 95.45 area. So if we get to the high to mid 95 area, I do see that as a buying opportunity, and I do see it as fairly likely that we will reach there. So let's just see what happens. If we were to continue lower, we've got 95.20, 95.15. We've got some intersecting trend lines here, but I don't see that as strong as the mid to high 95 area. Okay, I think that's all I can say on that subject. We should have had a good week being short the euro versus the dollar, and we should have had a good week, well, just generally being long the dollar. So what I'm trying to say to you is, if you've had a good week and you've banked some profits, I actually don't think you want to get too heavily involved at the moment. It would be a bit silly to get short the dollar in a bull trend without a strong sell signal, and we don't have that. But what we do have is a potential short-term signal that says we might have topped. So I'm saying exit longs and really sit and wait, especially as it is a Friday. You know, why get heavily involved? Why risk losing money? Now, we do have slightly more positive pattern here on the euro versus the US dollar. This is a slightly more bullish candle. So you heard what I said about the reversal pattern in the dollar index. Well, this is a potential reversal pattern in the euro. If you want to buy it, we're trading around 13.70. It's a relatively low risk trade. If you stop out below 112.90, you know, you could put a small position on. Okay, it's an 80 pip risk, but if it works, we're probably going to be quite quickly up at 114.60, maybe 115.00. This is the low down here, 115.06. We've got 115.07. So you can see immediately you've got a potential profit of, say, 80 pips there. So that would sort of make this worthwhile. And if we get up to 115.00, that puts the risk reward ratio in your favor. Who knows? We may even get up to 115.90, 116.00, which is the 23.6% fib, and that really would pay off. So it's a trade idea for you. 80 pips is a risk that I don't normally like taking. I like to look for 30, 40 pip risk trades, but this could be worth it. Again, stochastics oversold on the daily chart. On the weekly chart, it's interesting. We spiked below the 200 week moving average, which I saw as a sell signal, and of course we did continue lower, but we've really recovered on Thursday. So as long as we're holding above there, that's another little bullish signal, and that's around 113.60. So we are just hovering above there at the moment. So yeah, another little bullish signal. And on the hourly chart, we've got a potential inverse head and shoulders bullish. It's kind of a mirror image of what you've seen on the dollar index. You usually get that because the euro makes up the biggest component of that index. So again, holding above the 100-hour moving average, which is also around the 113.70, 60 area, you can see that's got some significance. We break above 114.05, let's call it 114.10. That's the high of this little swing move there. Then that should act as a buy signal. Again, it's the hourly chart. It's not that significant, but it should act as a buy signal. We've got the 200 moving hour average at 114.60, which ties in with that 500-day moving average, if I remember correctly. And then up there, we've got the 500-hour moving average up around 115.80. It'll probably be around 115.70. So that kind of ties in with that 115.90, 116 area. So there is some upside potential for this. And again, if you're buying it with a stop below 112.80, the risk is relatively small. We're going to have a look at some other dollar pairs, excuse me, to see if it backs up this theory of a little correction for the US dollar. This is the Aussie dollar. We've got a trend line here, which we've bounced just above. There's nothing particularly significant in the weekly chart. So we'll look at the daily chart. Okay, we've got a decent trend line here going back 3 months, and we've bounced off it. You see how we spiked below it on, that would have been Wednesday, just to fool the bears. But then we've got a good recovery, and again we've got this little 3-candle pattern here, which is minor bullish. We're oversold, so perhaps a recovery is on the cards. Let me just check the hourly chart, see if we've got that inverse head and shoulders again. Yes, we do. So we've got a little left shoulder here, we've got a head. In fact, even this head is a little a mini head and shoulders pattern. Can you see that? Left shoulder, almost a double bottom head, and the right shoulder. So as long as we're holding above, let me try and get a trend line on there. Oh, well, anyway, you can see where the trend line would be. Bang. The neckline would be from this point to this point, and we've held that, which is also minor bullish. So we've got the bigger head and shoulders pattern here. If we were now to break above 72.85, 72.90, that would act as our buy signal, and we should be up around 73.25.30, and then 73.55.60 as a decent target. So yeah, a little bit of upside for the Aussie dollar potentially as well. Ties in nicely with what we're thinking about the dollar. New Zealand dollar on the daily chart isn't showing anything particularly positive. It's just showing some candles with long wicks either side. So it is certainly showing some indecision, and that could indicate that we're bottoming out, although that doesn't necessarily mean we're going to turn higher. It just means we could trade sideways. The stochastics are sort of rounding. So yeah, a little potential for a recovery there. There's nothing showing on the weekly chart, so I'll quickly get rid of that one. On the hourly chart, let me just bring that one up. We've got a less clear inverse head and shoulders, but you could call it that. We've got the shoulder here, the head, and then potential right shoulder if we break above 66.10. So it's less obvious, but you could certainly argue that there is a bullish case there in the very, very short term at least. Dollar versus the Canadian, that 131.70.80 area has been lovely this week. Been a couple of opportunities to sell that. I'm short again. We've got this trend line which is holding, intersecting with a 23.6% fib. So it just seems to be working. Wouldn't be surprised to see this head a little bit lower. Just heading into overbought territory there, as you can see on the hourly chart. So it's not a particularly bearish case, but it does argue for a little bit of a correction. If anything, we just seem to be moving sideways in this, so it's worth selling it at the top of the range and seeing if we return to sort of the 130, 70, 50 area for profit taking before the weekend. Quick look at the hourly chart, see if it tells me anything. No, not really. We're in this upper channel, but you can see that 131, 70, 80 area is held, which is what I'd hoped. So let's see if we can return to at least 131, 30, 20. And if we were lucky enough to get down to 130, 90, 80, that would be a great place for taking some profit before the weekend.